Good morning, everybody. It's March 30th, 2021. Joseph Smith here with Travel Tax, and want to update you on the crazy world of tax that's going on right now. A little bit of a backdrop and a reminder, Congress, over 2 weeks ago, passed a law that retroactively exempted $10,200 per person of unemployment compensation from federal tax. At the same time, they waived all of the recovery payback penalties that if you had a government provided health insurance policy and got tax credits to pay for that and had to pay those back, the payback has been waived. And of course, we also have the change in the deadline. And then once that happened in the middle of tax season, all the trickle down occurred at the state level. And what do we have right now? We have over a dozen states that still haven't decided whether they are going to follow the federal change in the unemployment. And that's very critical because every state that has a tax, most of their tax returns pull numbers from the federal return. And not only do those states have to decide if they're going to follow the federal laws, they then have to get their state revenue commissions to change the software, give the fixes to the software company before anything can be done. See the mess that this has created? Congress deciding in the middle of March to change the tax laws. I hope it never happens again. So, where are we? Travel tax here. What are we doing for those clients that have already filed and are affected by this? Well, the IRS already announced that they will fix the unemployment issue. So if you've already filed and you did not exempt that unemployment, expect to be seeing a check or a deposit downstream. But then we have the states. And there are so many states that have to be amended now because of this change. And some of them have collateral damage. If you are an Alabama resident, you may have to pay back money to Alabama Department of Revenue because one of the things that Alabama uses as a part of their itemized deductions is the amount of federal tax that you are obligated to pay. So if you're already filed, then your federal tax liability has now changed. It's lower because you don't have to pay taxes on unemployment anymore. But what that means is your deductions for Alabama purposes have now decreased. And if you're already filed with a higher set of deductions and now those are taken away, you're going to have to pay back. Collateral damage all over the place. So we have an entire bin that's sitting in our office for those that are affected by the unemployment and their states have not decided. We are working on that, and weekly we try to update those. Healthcare credits. If you already filed and you paid back some of those credits, the IRS has not decided how they're going to handle that yet. So it also means that if you have those paybacks and you haven't filed, you can't file yet. You have to sit and wait. And at the same time, for back to the unemployment situation, if you haven't filed yet and you have one of those states that haven't decided or fixed their software, they can't file yet. Because one state, especially if you're a multi-state professional, will change all the other states as well. Then finally, of course, there's the deadline change to May 17th. Most every state is on board with this except for Hawaii, and we may discover a few other ones along the way. So if you ask my colleagues here, has this been a very frustrating tax season? Yeah, on record, this is probably the worst. It has put most tax offices and most tax professionals created a disruption in their workflow. And that doesn't do well when they're trying to keep up with emails and everything as we get closer to the end of the deadline. So for now, have a great week. We'll talk to you later.